G'day folks, welcome back to another episode of Beats Investing. Today the charts are showing for gold being long with cautionary positions. Silver still bearish. So if we go to the outlook, as of today, April 19, gold price have surged to a record $3,357.40 per ounce, driven by escalating US tariffs under President Trump's administration, leading investors to seek safe haven assets amid fears of potential recession. Analysts including Goldman Sachs and UBS have raised their forecast, with projections reaching up to 4,500 if recession risks materialise. For silver, benefiting from its dual role as both an industrial and precious metal, silver is poised for a breakout, with forecasts suggesting prices could reach $40 by April and potentially $50 in the near term. Analysts anticipate that silver may outperform gold in 2025 due to increasing industrial demand and a persistent supply deficit. So here we've got for gold, the long-term trends on the monthly, still very bullish above the moving averages, and there's no CCI for it drawn from the monthly. On the weekly, however, again, bullish momentum on the price chart above the moving averages, but notice on the CCI it's falling off. That's a bearish divergence. Now, in our last video, we drew these trend lines, and I'm going to adjust those slightly higher because the price has risen and so has the CCI, but that CCI is still a bearish diversion. So be careful of going too strongly bullish. That's still rising, of course, and if that rises any much more than that previous high, we're going to invalidate the divergence. But at the moment, the price is still bullish. On the daily, again, another bearish divergence, and I'm going to adjust those. Now, that's almost a double top on the CCI versus higher highs on the price, and that is a resistance up there at 3357. So we might see a pullback from there possibly. And what I've got down here as well is the CCI 1500, and I put a video on that out recently, so I referenced that in the last couple of hours I put out. So if you want to learn how to draw that, and basically it just replicates this CCI 150 on a 1500 level, but it gives you a smoother momentum, if you like, or a smoother trend. So you can see there predominantly bearish trades during that period and more bullish through that period. And at the moment that's still moving higher, so possibly a bit more higher prices to go, and that's on the daily. If we go to the 1 hour chart, again taking long trades only, but again notice on the 1 hour chart we've got another bearish divergence here. So lower highs on the CCI versus higher highs on the price, and these divergences on different time frames, by the way, are independent. They're not necessarily aligned. But also notice the CCI 1500 is starting to turn down a bit, so that could be a start of a retrace. The other way to use this 1500 compared to this is to confirm the start of a retrace on the divergence. So when you see that hitting that new high on the CCI, and then the 1500 CCI starts breaking down, that could be the start of a retrace to the downside. We saw that here, for example, we had a bullish divergence, higher lows on the CCI versus lower lows on the price, and at that point, that would have been the start of an uptrend from there on that CCI 1500. So that there would have been a bit early on 150, but the 1500 actually confirmed a move to the upside. Back here again, another double top on the CCI, and that started breaking down here once the price was exhausted. Another bearish divergence here. This one is a lot closer to that divergence, and it broke down again. So again, that CCI 1500 is available to the previous video we just did a few hours ago. Also in terms of back testing, this is the 1 hour chart again. We started the back test here related to the daily when it broke above long there, and had you gone long, this is the long test, from that one on the stop loss approach, you'd be down about almost $750 on the stop loss approach. And on the average down approach, you'll notice there we averaged down a few times, you'd be up $1,691 on the stop loss approach. And again, the strategy there is on the 1 hour time frame, when the price breaks above, let me zoom in for a moment, when the price breaks above the moving average and it's trending above the moving average, and those moving averages have to be trending long, and the CCI has to have a fresh breakout. That's why it started an open position there and not back here. We opened a position only on a fresh breakout. So it opened up a position there and it closed it out a couple of hours later. So small gain there, another one entry there, closed it out, another couple of entries there as well. So that's how that strategy works. The same strategy works for the stop loss approach, except instead of averaging down at 0.005%, it closes out with a stop loss at 0.005%, hence the losses on the stop loss approach. The stop loss approach works a lot stronger when the chart is trending strongly up in this case. So for silver, on the monthly, we've got a bullish momentum. You can see there that also on the CCI, but notice it's pulling back towards that moving average. On the weekly, we had another bearish divergence here. That broke down, hit our target range, and that target range is 23-38% level of the Fibonacci range. So if I drew a Fibonacci between that high and that low, we take it back to the recent low before the divergence started. That's at 23 as a minimum retrace. You can see there it bounced out of there, then it bounced slightly below the 38%, bounced out of there, and now it's falling, it fell a bit lower, and then it's bounced off from there as well. The CCI has been declining since. So again, a bearish momentum on the weekly, so be careful of going long on silver. On the daily, again, it's hit this major and minor resistance up here at 34.87, 34.24 respectively. And since then, we've had a bearish divergence here, lower highs versus higher highs on the price, and it broke down very strongly. Again, there's that CCI 1500 confirming the downtrend after that divergence. We had another bearish one here, but notice here we had another, so that would have been a continuation of an uptrend, even though it broke lower. And if we go to the 1 hour chart, see if there's any micro moves. So there you'll notice at the moment the daily's in a bearish momentum predominantly, even though the price and the CCI are broken higher. And here we've got the CCI 1500 showing a bullish momentum as well initially during that period, but now it's starting to break lower again along with the CCI 150 on the 1 hour time frame. And the 1 hour time frame here, we've got a almost a double top on the CCI versus higher highs on the price, and that's already broken to the downside. So predominantly going short only during this period. But again, I'd like to see this break a lot lower than these moving averages to confirm shorting positions. Now in terms of the back testing, I've started the back tests here from this period back here and the 4th of March. That's where the stop loss and the average down approach have worked. Now again, we only go in the direction of the higher time frame, so you would have ideally gotten out well before this breakdown on the daily. And you can see here on the 1 hour time frame, that gave you a lot of opportunities to get out of long positions. So according to this, and notice also we've got, if I zoom in a bit, we had a couple of bearish divergence, so you would have ideally got out of that trade there. There was another, let me go over to this side. We had a bullish divergence here after going short for some time, and that confirmed a break to the upside. That broke up to the minimum range, but then it kept going higher in accordance with this CCI 1500. And then it started to break down again. Again, that was an early sign there, even though the price drifted sideways. The CCI 150 was telling you to be careful and go to get out of any long trades, and this confirmed it here. There was another move to the upside here, potentially maintain your long positions, and then starting to break down again there. So again, you would have got in and out, and here you would have gotten out at the very latest by this stage here of long positions. And you can see there the long positions at that point would have gained you on a stop loss approach 2,815, and on the average down approach 6,515. Now again, it dropped there, then it went higher again, and you would have got out again at that point there. So always follow. Now that would have dropped back a bit because of a few stop loss positions there, but the average down, you would have gained a bit more on that one. So going from, where was it at that point? I think it was 6,515, and had you stayed in the trade and gone long again there, you would have gotten out at that point. So from 6,515 to 7,745, whereas a stop loss dropped from 2,815, dropped to 2,075. So always pay attention to these trends and avoid staying in the trend when the price and the CCI 1500 especially goes against you. If you're new to trading, we're now including weekly video series, Pete's Investing Plus One, as part of the Pete's Investing channel. The Plus One videos are a dumbed down version of our strategies and give you a better insight into our analysis and help you follow our daily videos. If you enjoy the content and help keep me motivated to keep doing these videos, subscribe at least on a free trial to my Patreon page, where I publish weekly bullish shares across various regions of the world's markets. Think of it as sitting down with me over a cup of coffee. The last video was put out a few hours ago. Thanks, and talk to you in our next video.